Hey everyone, good afternoon. It is Friday at 1:42. Let's go through a recap of a really wild week of trading. Um, uh, we've now digested the March 31 report for several days. This is the report day here. This is July corn up in front of you. And I've got a blank chart because there's a lot of things you can look at on a chart and start to get pretty confused, right? And so the tendency is to start fixating on something, and what we want to do is try to simplify this as much as possible. So first and foremost, what I want to do is give you our cloud. So July corn, we are below our cloud, but here's something that's interesting, which is this setup right here is actually turning very bullish July corn because of the slope of this leading edge here and where we are in relation to 26 days ago. And so I'm a little bit more neutral corn here than I have been, just because of the way this setup is. Now, those of you that have been with us for a while know that our primary trading system is um, is this line right here, and look where we are. We're right smack on it. Okay, so, and it's not unusual for us to break it and then come back down, especially when we have a breakdown like this. But when you start to see the cloud cross like this one did, then that starts to change the tune just a little bit. Now, this is going to be a relatively short video because here's the overall summary. We're more neutral today than we have been. And we're not neutral because of the stocks report. We're not neutral because of the growing ending stocks for next year that we've been super bearish about. We are simply neutral because of price action and price action alone. And let me show you exactly what we're talking about in relation to these headlines, okay? Now remember, you can't look at any one chart in a vacuum across this grain complex. You have to look at them all together and make an educated decision. So here we've rallied off the low and we've come right back down. Let me put some Fibonacci retracement levels on here for you to see it. July corn, overall, we've retraced the 50% mark. Now from this intermediate low here, we came up, we have retraced 61.8. What's the most common retracement in a wave 2 position? It is 61.8, and that's exactly where we stopped here. Now, if we go back to the May contract, which is the most bullish, and we put the same analysis on, it stopped at the 38.2% retracement of the entire up move, and it has also stopped at the 61.8 of the secondary move, moving from here to here. Both of those are not bearish until they break lower. Again, also look at the leading edge of the cloud. This is about to cross. This crossed a few days ago, and we are trading above where we were 26 days ago in May corn. So it's no surprise that that the nearby contracts are more bullish than the out. Now let's look at December. This is the most bearish, but on the other hand, I want to show you something, and let me get my force index up. Look at the momentum. The momentum on this down move in December corn is waning in relationship to the price action. And so it's going to take a lot bigger down move for us to get overly excited. So this makes us more neutral corn as long as this stuff in here starts to hold. And if we see December corn start to move sideways or up just a little bit, and we get this line back above where we were 26 days ago, with this cross, with the other ones that we've had, and with this bullish leading edge, that could potentially start turning us bullish. Now, don't run out and say, hey, oh my gosh, we flipped from bullish to bearish. That's not what I'm saying, because the fundamentals still lean bearish, but the technical action is telling us that maybe we're done for now on our down move. This is the November to December corn spread, okay? So this is July corn minus December corn plotted. And you can see exactly where this spread reversed from today, which is 38.2% retracement. Let me put our hedge line on here so you can see where this fits, and it's clearly bullish. So this spread leans bullish, the corn complex, and it should rise the whole tide just a little bit, especially if it starts to work back towards this most recent high. So I don't know what's going to cause it to do that, but this is less bearish than it has been, and has got our full and undivided attention as we've closed the week here. Now let's look at soybeans, because this is even more interesting. Okay, let me start with the new crop soybeans. Here we are. Let me take this retracement level off, but let me put the new ones on. Now look at what we're doing on the front month here. We have the same increasing leading edge. We have a rising 9-day, and we've reversed today and held the 38.2% retracement level. And we've also continued to respect the report day low. So this is in conflict with what we understand the fundamentals to be. We talked about this earlier. We said earlier this week that as long as this 1345 level holds, that we're leaning bearish. But when you start to have this type of a structure and you're holding the 38.2 with the old crop contracts as bullish as they are, it has to make you pause. So now let's look at July. Where did my July go? Here it is. Here's our July contract. So you can see where we held here in July. Straight up, down, 38.2, bounce. Now, same thing as corn. You're starting to see these bullish crosses. This is going to cross on Monday. This is going to come up closer to giving a bullish buy signal, and it's not going to take a whole lot of days of either sideways chop or bullishness or up in order to get us back above where we were 26 days ago. So stay tuned. We need to see this start to hold. And again, let me take this back and make it simple for your hedge line. July beans held their hedge line today, and so did May. So beans are bullish above their hedge line. They're holding 38.2% retracement, and they're doing so a lot in conjunction with corn. Now let's look at one more grain, right? Look at what wheat has done. Here's the low, here's the intermediate high, and look at where we bounced today, straight off of the 38.2% retracement level. In addition, wheat is more bullish than the rest because it's got this bullish cross right here. It's trading above where it was 26 days ago, and we have this bullish Kumo, which is already ascending. So if you look at this in totality, what you might see, or what we may be having here, is wheat leading the way higher. And we did read some fundamental news that is very bullish wheat, if it's true, which is that looking forward, our export number may be as much as 500 million bushels too low on the USDA's balance sheet. So if you start to increase wheat export demand by that much with our weather situation, then you could have a very explosive situation in wheat, which, by the way, is exactly what this setup is telling you. And we've been bearish wheat below this line right here. I'm not saying we're changing that, but if we do go higher, I think we now understand why. And if wheat explodes, then corn is going to go with it for sure. So stay tuned to what that price action tells us. And again, this isn't us being wishy-washy or hopeful. We're trying to reconcile what we are learning the fundamentals to be against this price action. And this entire move has been more bullish than what the fundamentals should have allowed. Same with corn, same with beans. None of them should have moved as much as they did, but yet here we are, and so something's got to materialize to justify it, or the bottom of is going to drop out of the rock here. So for now, we're holding hedges across the board, but stay tuned, because we may very well be lifting hedges sooner rather than later if we come out of this holiday week and we end up with some buying. So I guess with that, I'm going to leave you with just a little bit of Easter hope that higher prices could come. But please don't run around and say, oh my gosh, we're super bullish. We're not that. We're bearish longer term, but in the short term here, we may need to see a bounce, and we may need to reset some of these things to be able to sell them from higher levels. All right, that's 10 minutes. I hope everyone has a happy Easter. Remember, we'll be back with you next week. Markets are closed tomorrow. They'll reopen Monday, and we'll be back with you with a video then, and we'll keep you posted all throughout as we learn of things and get to, and see them develop. Remember, trading has significant risk, and you should only do so in light of your own financial condition. Everything we've talked about in this video is just our opinion, and it's really and it is subject to change based on price action. Hope you guys have a great day. Talk to you later.